Eric Muaded, Muaded.com, with a weekend market analysis for the weekend of May 23rd and May 24th, 2015. Let's take a look at how markets closed on Friday. We see a last hour erosion slightly in prices. The Dow down about 2.9, Nasdaq unchanged, S&P 500 down slightly 0.22%. We see that the biggest mover here was crude oil, which was down 1.4%. For the week, the S&P 500 was unchanged, up 0.16%. For the week, the Dow was down slightly, down 0.22%. For the week, the Nasdaq was up 0.81%. And we see that this week the Dow transports were down significantly, down 2.29%. In fact, there's a question here being asked by the Dow transports, because if you take a look at the 3-year weekly chart, you can see that the last time there was a crossover between the 13-week moving average crossing over the 34-week moving average, the market went on a nice bullish run. And so now we see what seems like the opposite here, which is a bearish crossover between the 13-week moving average and the 34-week moving average, which asks the question of what this means in terms of future market direction in the coming weeks and in the coming months. So if this was good enough to take the market on a very strong bullish run, now the question is this crossover going to take place, and is the market due for a major correction? That's the question, and we'll cover this during this video. Before I proceed with the analysis, just a quick reminder, you can find my latest, go to YouTube and find my latest world market analysis for the weekend of May 23rd and May 24th, where we cover world markets across the globe and the main markets, so we can have a view of what's going on worldwide. So check out that video analysis during this long weekend. So let's go to the charts. We begin by taking a look at the Nasdaq weekly chart, and obviously the first thing we have to address is this potential breakout on the weekly, as the Nasdaq is doing its best to stay and close above 5,092.09. We can see that at the close we failed to hold above the previous weekly closing high. That does not mean that the market cannot do that in the coming weeks, but for this week so far we've been unable to break out above 5,092.09. Obviously, if this market is to record higher prices, the first task is going to be finding strength to close above that recent weekly closing high. Otherwise, if this becomes failure to hold above that threshold, then that suggests that the market is running out of momentum and could actually be looking to correct with a move lower. If we take a look at the weekly RSI, again we come back to this multi-month wedge going back to 2014, and we still continue trading within this wedge, and we continue trading in this wedge. Eventually we are going to resolve either to the upside with a breakout, or we're going to resolve down with a breakdown from that wedge. So eventually the market is going to tell us which way it wants to go. If we take a look at the Nasdaq daily, we see here an attempt to break out above the recent daily closing high of 5,092. Right now we did close below that, just a couple of points below that. So right now this looks like a failed breakout. Of course the market can still, if it chooses to, break out above that line there, or maybe this is showing signs of the market not being able to hold above the previous daily closing high, and if this is a failed breakout attempt, eventually we might start rolling over. If we take a look at the daily RSI, we see that we have what looks like a declining line of resistance right here, and so the market does need to break out and stay above that line for this to be setting up a move higher. Otherwise, at this rate, with this line showing resistance, it looks like if that is resistance, then as we begin the new week, we should start seeing the market start pulling back. So either it's resistance and a pullback, or eventually the market can break out above that line of resistance for a move higher. We take a look at the Dow weekly, and on the Dow we see that this is week number 2 of closing above the previous weekly closing high of 18,140. Even though it was a down week, but we still continue holding above the previous weekly closing high, which is good. And as long as the market is holding above that level, then we should at least expect the market to be looking to show some bullish tone. Right now, not the best follow through. You'd like the market to break out on week number 1 and follow through on the following week with a positive close, but we didn't get that follow through. Now, if you take a look at the weekly RSI, and there's a line here I'm going to draw connecting the previous highs, something like that. Now I draw it through this high right there, so it can make as much contact with the other points on this, so it connects to other highs. You can see that as of this week, this looks like resistance right there. So maybe the weekly is showing resistance with this down week. Otherwise, if the market continues showing this weekly resistance, in my opinion here, more than likely we are due for a pullback. If the market is to do well, then obviously it needs to jump above this resistance and move above it. Also, there's an argument that can be made about negative divergence, because we made an incremental higher high last week with a breakout closing high there on the Dow, yet the technicals are not making fresh highs. Also, this high in the market comes with the RSI failing to hold above 61.8 on the weekly. So this failure for the RSI not moving above 61.8 right there is showing that this is not setting up very well. So this, to me, by itself is a sell signal, unless the market can move above that negative divergence line. For now, it looks like negative divergence, and it looks to me like on the weekly, the market seems to be indicating that it is due for a pullback. We take a look at the Dow daily, and again on the daily we see here with this Friday close that we failed to hold above the previous daily closing highs of 18,288. So that's a failed daily breakout for now, failure to hold above prior daily closing highs. And if this is a failed breakout, the indication here is that more than likely we are due for some type of a pullback. We also see that there's a line where the market is showing resistance, and I'll show you that line. There are two lines. The first line is off the high here. Off that high, there was a break level which was here. That break level corresponds with this line that I'm drawing here. And as you can see, over the last couple of days, this past week, the market came there, hit that level with uniform activity, and seems to be stalling. So that's one red line, or at least a line showing resistance, indicating day-to-day pullback is imminent, or at least has begun taking place. There's also another line connecting the previous highs. So there was another line going back to late last year, this line right here, which connected the highs here, here, and here. And once the market broke out in November, it started a nice move. So this move from here to here was after this breakout. So let me show that again. So this breakout here corresponds with this entry. If we extend that same line like that, it gives us very interesting levels. Number one, there was resistance on this backtest failure at this point, which was this high here, and the market did pull back. As you can see, there was a pullback at that point. And then there was another resistance here, which is the highs right there. And since then, the market has generally been down below that level. And now we've come back with another resistance on this line here. So let me draw that again. Let me take that off and just spend a second here, because I need to explain that in terms of what I see. So this prior line of a breakout here extended, and it's given us 3 sell signals. And let me show that here for those highs. Again, resistance on the line, which is this high, and now it's giving us another short-term sell signal. So I think if we use that by itself, indication there is more than likely this market is due for a pullback. Take a look at the hourly for the Dow. Early in the week, we had been watching the resistance based on this top side of the hourly RSI, and as you can see with the double arrows here, the market came and hit that, and since then we are off intraday highs. So the pullback began early in the week because of this resistance that we were watching midweek, and now I think we are almost in no man's land, because neither we are not in at the resistance line nor are we at the support line. So I think it could be sideways to down, in my opinion, based on that hourly chart. Now there's an argument here short term on the 30-minute chart. So the 30-minute chart for the Dow, and it shows that at the close of Friday the market has come back to the potential line of support on the 30-minute chart. So this could easily become support here, just as it was support on the line during these lows here. So depending on how things go early on in the new week, either this line holds for the market to start a new week. Otherwise, if it breaks below that support line, then maybe we might start the week down. As discussed earlier in the video, the Dow Transports Weekly is showing potential signs of a crossover here between the 13-week moving average and the 34-week moving average. So this here would be bearish, indicating lower prices, just like it was bullish crossover between the 13-week moving average and the 34-week moving average here in early 2013, where the market had a nice run. So that's something to watch. Those crossovers can be meaningful in giving you direction. Couple of things here to note is over the last couple of weeks we've been watching the market do its best to hold this channel line. Now we are well below that channel line, so that's a filled channel. That doesn't mean that the market has to go down, straight down. It just means that this momentum has come to a stop and the market could be sideways to down. Okay, so that's one violated trend line. There was another trend line connecting, or at least showing some stability based on the 2015 weekly closing lows. So we are trading below and recording fresh weekly closing lows for 2015. So all indications here, if you take a look at the price, is that the market is broken and could be going down. That's based on the price. But when you look at the RSI shows slightly different take. Remember, we've been talking about this line that was a breakout line, and once the market moved above that line early on in 2013, we began this nice move. And so we extend that line like that, and we see that every time the market has come and back tested the line successfully, the market would go on to record new highs, and even recently touched that line for these lows here. And we've come here, we've hit this level once, which was this high or this low, and the market moved higher. Now we are still trying to find support on the same line. So this line has yet to be violated, which tells me that we should not necessarily assume the market has to go down, and that actually the market could actually bounce. And that's my view, that the Dow Transports for now are not broken. I think I would turn bearish on the Dow Transports once this line is violated. Right now this line continues to stay and seems to be offering support. So my thinking is we might get support on the Dow Transports. Have they been stretched? Yes. Are they broken? Not yet. Also, if we take a look at where the move began, so where this off the lows here, so off the lows right there, anybody who bought there had a chance at least to enjoy some of this ride, if not all of that ride. And that movement in RSI began somewhere here, and we can draw a line from there which goes back something like that, and you can see the market has bounced once on the line, on the green line here, which gave us those nice lows, and over the last couple of weeks we've been holding back to the green line. My thinking is that if this holds and the market can bounce from here, then that's all she needs, because if that is support, that indicates that more than likely we are going to have a strong rebound. So either we find support on those two levels. First line that it needs to hold is here, and the second line is this line. If both of them hold, I would say that that is good enough signal that the market wants to move higher. Also, if you take a look at the Dow Transports daily, interestingly enough, even after what seems like a break here with these lower lows, also we are trading below the recent or the previous level of support. As you can see, market's been holding steady throughout this period with support on the green line or green area. Market's been bouncing off that on multiple occasions. Now we are trading below this green band of support. So yes, it looks bearish, and also you can see that we are making and ending the week with a lower low. But if you take a look at the RSI continues making higher lows, and that's improving technical picture, could be enough to stop this bleeding. We also see that the market has come back to this line here, right there, where it's been bouncing. So if it can hold those two lines, hold support on the lows line here, and also hold support on this green line, then on the daily, that would indicate that the market could also bounce and have a nice recovery. S&P 500 did manage to follow through on its weekly breakout. So this is week number 2, closing above 2117.69. So that's a good follow through. That's what you want to see during a quality breakout. So S&P 500 doing its best to show that it can continue on to record higher prices. The only problem is, again, we see that on the weekly RSI we have this wedge that is still developing. So we haven't really concluded and found direction, either breaking out for a nice surge in price or breaking down for a strong pullback in the market. We continue trading in that wedge. It's only after we conclude either in either direction above or below the wedge that the market is going to give us indication of where it wants to go short term. On the daily for the S&P 500, ever since breaking out on the daily chart, the market has held above the previous daily closing high of 2117.69. So ever since this breakout move here, we've stayed above that level, which is good. The only problem is now if we take a look at the daily RSI, we see this line of resistance. In fact, over the last couple of days, we seem to have formed a double top, as you can see here, suggesting that more than likely this is where the market starts pulling back. So as long as the market is showing that there's resistance on this line, and unless it can break out above that line, then we have to assume that that double top indicates that more than likely after that resistance, more than likely RSI pulls back because price is also gonna pull back. Now if you're looking for a reason to short the market or to find short ideas, if the market moves back below the previous breakout level of 2117, that's going to be indication of a market that is losing momentum. So any move back below this price would be a reason to maybe short the market or maybe to look for short opportunities. If we take a look at the hourly RSI, just like the Dow, we seem to have hit this line during the week, and since then the market's a little bit off the highs there, not by much, but this is resistance. And I think as long as this line is resistance, every move in the market is suspect. Eventually, if the market can find a way or gather enough momentum to break out above that line, we have to assume that most moves are a little bit suspect until we see a breakout. So for now, we are either, I think, in my opinion, hour to hour, stuck between these two ranges. On the top side, we seem to be finding RSI resistance, and on the downside we've been finding support on this line. So we are stuck between these two lines, and maybe eventually we break out or break down from one of these lines for indication of where the next sizable swing trade is going to be. If we take a look at Apple, we can see that this was the breakout level, the previous monthly closing high, and the price there for the market to have broken out, and the trigger point on the monthly was 127 0.93. So since that move above that level, market has gone on to see a nice move this past couple of weeks. And as long as that's the case, this market should see higher prices. Also keep in mind that we continue to trade very well with Apple showing RSI continuing to hold above 69.1, something it's done since June, July of last year, and which might explain this nice price action. So as long as it's trading above 69.1, I would expect this stock to continue recording higher prices. Also take note of, if you take a look at the reason why, is if you take a look at this example, and we can use Apple itself, you can see this move here, this breakout move, sometime in 2010. It broke out and also moved the RSI on the monthly above 69.1. It went on a run on a split adjusted basis from about $28 all the way to $90 in about 2 years or so. And why? Because the RSI maintained its price, or its level above 69.1. So if it can do the same thing here, one can expect higher prices as far as Apple is concerned. Take a look at the weekly. The buy point on the weekly was this recent weekly closing high. It blasted above that this past week, and the level there to have watched was 129.74. So as long as it's holding above that previous weekly closing high, this is breakout. Yes, it looks great on the weekly, on the monthly, but if you take a look at the daily, we seem to have come into some level where the market could stall. A couple of things is the previous break of the highs here happened during this RSI break. So we broke down in the RSI here, which was off the highs there, which is the actual daily closing high. Draw a straight line, something like that. We can see we've had uniform activity rejection here for this short-term highs, and now we've come back to this level. So it would make sense if this becomes resistance, or the red line becomes resistance, that indicates that Apple is about to pull back on a day-to-day basis. Take a look at the hourly, and on the hourly we can see the same type analysis that we broke down on the RSI here, and this break point came off the highs here. Draw a line from there, and you can see that this seems to be resistance. If that is true, that would indicate that hour to hour, day to day, this could pull back. In fact, if you extend this line going backwards this way, you'll notice that it broke down again here, which was off this highs, and we had the market bring the stock down. So if this is resistance again, I would expect another move lower based on that hourly chart analysis. Otherwise, if it wants to record higher prices in the short term, it does need to trade above that red area where it has been failing. Again, just a quick reminder that you can check out my weekend world market analysis for the weekend of May 23rd and May 24th, 2015, and this should be available for you guys to check out as you enjoy your long holiday weekend. So check that out as a continuation of part 1 of this US market analysis. Alright, as we come to the conclusion here, remember I'm going to have part 2 available for subscribers sometime during the long weekend. Could be on Sunday, maybe on Monday. I'll send you subscribers part 2 of this weekend market analysis, where I'm going to add 1 or 2 stocks that I think are breaking out. So check your email sometime over the weekend, and I should be sending that to you. I believe it's going to be probably Sunday. It will be my approximation. Otherwise, in conclusion here, we take a look at the S&P 500, and as you can see, it continues trading above the previous monthly closing high, and as long as the S&P 500 is holding above 2104.50, which is the previous monthly closing high, this market should continue trading well. We can see here that the RSI continues trading above 69.10, which is very strong indication of intention to go higher. Market's been trading above that level since 2013, and that's why we've had this nice explosion, nice movement in the market. If we take a look at the Dow, The Dow is also holding above the previous monthly closing high, and as long as it is holding above that level, it's going to be hard to bring this market down. So for the Dow, the level to watch is 18,132.70. As long as it's trading above that level, that's a strong market. Now, as far as the Dow is concerned, we have yet to trade above 69.1, but if it does move above 69.1, that would indicate even added momentum to the upside. Take a look at the Nasdaq, which, as you can see here, is still doing well and holding the previous level on the breakout on a monthly closing basis. The previous monthly closing high that it needs to stay above is at 4963.53. So as long as the Nasdaq is holding above 4963.53, this is a good market and one that should continue over time trading higher. Keep in mind that the Nasdaq also has been trading above 69.1 since middle of 2013, and you can see this RSI action is very strong. Otherwise, enjoy your weekend. Eric Mwathe, wait for subscribers. I'll be sending you part 2 sometime during the long holiday weekend. Eric Mwathe, good luck, peace, and blessings. Woo! EACS, yeah.